Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boyceno with my co-host, Kevin Casey. And today we are joined by Catherine Hall. Hi, Catherine. How are you?
I am fantastic. Thank you all so much for having me, both of you. It's so great to be here.
Oh,
I
we are
know.
very happy you're here. We've known you for quite a while. We've thought about doing this show many times, but because there are so many 203K changes in the last few months, it really just seemed it was high time. So we're going to come back to that in a minute. I just want to take a moment and run through a few things. Just a reminder, we're part of the Chrisman Media Group, so check out everything that is happening in Rob Chrisman's world. Also remember that we have a YouTube channel, Mortgage Pros 411, which our sweet friend, he hates it when I call him that, Jason Bellevue does for us. But you can go watch our shows on double time if you want and catch up. With that being said, it is weird out there with the rates, isn't it? Up and down and up and down and up and down, but mostly up lately. And our friends at MBS High were talking about the October effect. Have you heard of this, Kevin?
I have not.
Okay, so this is year 3. Okay, so for the last 2 years, it was nothing but up, rates going up for the first 3 weeks
Right.
of the month, and then it topped out and it got better.
Right.
So that would have been yesterday. So cross our fingers and hope to God that that is going to be the case.
Because I do remember
Forward.
we did peak out last year about this time on mortgage rates.
No, it was okay. Okay, listen, I just said that, and it
Yeah,
was
I know.
exactly this time. That's the whole point.
Yeah, exactly.
So we'll see. And the year before, by the way, which I did not recall. I mean, we all kind of remember the bloodbath that was last October, but we were trying to block it out, but so far no luck.
Octobers tend to be a little dicey from
Well,
going
this is
back
year
in
3
history.
of it. So anyway, it's something to remember for next year. Good Lord. With that being said, the Fed comments are still pretty even keel. They're still acting like they want to stay focused on having some further reductions. There's a 90% chance that we will have another 25 basis point cut at the Fed at the meeting.
Wait, another 25? You mean a 25? We haven't had a 25 basis cut yet.
Oh,
Got a
God.
50% basis
Okay,
cut.
okay. Yes, thank you. You are correct.
So I would be all rooting for another 50% basis point, but that would be my personal
50% or 50 basis
50
points.
bips. 50
Okay,
bips.
with that being said, we know what happened when we just lowered 50 basis points. Our rates have gone up.
Yeah, the rates went up. What the heck?
I mean, so there you go, which again is also very, very normal. So they're still pricing in 90% for November, maybe 70-ish% for December, but also next week is big, kids. It is jobs week again. We get another BLS jobs report and we get PCE. And I'm just dying to see what this month's offering for BLS looks like. Because this month, whatever the last one was, that was crazy. It was unlike anything we've seen in a very long time. So to close out the week, this week, though, we'll have existing home sales tomorrow, initial jobless claims on Thursday, and those things have been moving the market. So just stay on track and don't think that you're going to achieve more by floating than by locking, for goodness sake. Thank God I locked last week on something. Jeez Louise.
Now we do have something coming up first week in November that somehow the bond market
we don't
feels
speak of
might
this.
be changing rates.
We do not speak of this. God. Oh my God. 50% of the
we had a
country
little
is going to
comment
be very
before.
upset.
A
What?
little comment before the show that the bond market is worried that Trump will be elected, and that's why rates are going bad. And I said that's because the bond market people listen to conservative stations because that's where they get the bond information.
Oh
And
my
that's
God.
why they think that Trump is going to win.
Okay, well, that's about as reasonable as any other hypothesis, I would think. So, with that being said, we've got retail sales that came in hotter than expectations, but it's interesting because the seasonal adjustments that they used this year were the strongest seasonal adjustments they've used in literally not years, decades. And if you were using the seasonal adjustments from last year versus the ones they used this year, we would have had a lower number on retail sales.
Oh,
So the
interesting.
seasonal adjustments thing is really, we need
Not
to keep an eye
political
on
at
it.
all.
What?
Not no politics involved in these numbers.
Okay. Oh, okay. We're not doing this. Okay. We're not doing that. All right. With all that being said, Catherine, tell us a little bit about yourself. This is your organization. Tell us how it all came to be.
All right. Well, thank you again so much for having me on the call. I am so honored to be here. My name again is Catherine Hall. I'm known as America's 203K Queen. And I actually started my company over 30 years ago as a 203K consultant, as a home inspector who was looking for a way to separate ourselves from in a very tight market. And so I actually found that rehab consulting was an amazing way to help people and help us rebuild neighborhoods one home at a time.
Mm.
This was an area that I actually developed a niche in. We actually partnered with the federal government through city organizations to provide consultation reports and inspections to help people understand what FHA requires of a property in order to insure the mortgage. Because a lot of people don't know what FHA appraisal requirements were. And so in order to build my business, because it started to take off, I became a multi-inspector firm, kept hiring and training. And I found that I had all this training material literally in a box. And so I just gave it to my inspectors. And that was how the original company, 203K in a Box, was born. I was able to share this with people around the country. And now we actually have an association of over 150 members around the country. And we have a common goal to raise the awareness, the competency, consistency, and community among all the participants in the world of renovation home ownership. And so that's what my passion is. That's my mission. And that's what I try to bring to every conversation, especially when I'm excited having the opportunity to talk to loan officers and mortgage professionals, because many in your part of our industry have a very limited understanding of the power and the potential and the profits for you with rehab loans. And so that's why I'm very thrilled to be here.
Well, we're really happy to have you too. And we've known you for a number of years and have seen you at different conferences around the country numerous times. And let me just say, Catherine is very easy to spot in a crowd. She is always wearing her very distinctive red outfits and
And red shoes.
what?
And red shoes.
And that big smile and that just, wonderful personality and so much information to share. So let's take a dive into, let's just start with 203Ks. And
Yes.
why don't you give us the cursory, just for anyone who's new, who doesn't know what it is, give us the cursory overview of what it is.
I'm going to hit the share button and just start it. So hold
All
on
right,
for a
that sounds
second.
great.
Just hit the play. I actually have a presentation. And if I can, if it's okay for me to hang on for a second, hit the present button. Great. Presenter view.
We're
Thank
lucky. We're feeling lucky, guys, that she has internet this morning. She is in Florida, and apparently, for some reason, we can't figure out why, her internet has been a little spotty in the last couple of weeks. So
Florida.
we're having a moment where it's good.
Just a thing. Yeah, just Florida. Just a thing. Not to share that. Okay, great. So let me hit the back button. Bingo. Okay, great. So there you go. Let me know if you can see my screen.
Yep, we can.
All right. So first of all, I do want to say that if you like, I would love to invite everybody who is on the call today. Let me hit the share button one more time and put this over here and stick me right there. Great. Share. Very good. I'd like to mention to anyone who's interested, we have a weekly webinar series every Wednesday night at 8 p.m. It's called ABCs of 203K. And so if anyone wants to join us, you can simply just go to our website, nafhac.org/ABCSOF203K. I'll type it in the chat
God,
later.
that's crazy. Okay, so do me a favor and you'll shoot that to me. We'll embed it in our YouTube channel so that people can see it. They're not going to be able to see your chats, just so you know. So,
oh yeah, okay. And anyway, and they can see the archives of, we've been doing this for the past 23 weeks. We started May 1st. So actually we've been sharing little bits every week. So understanding the HUD's new 203K guidelines, that's what I want to talk about right now. And just as Audrey had mentioned, the reason why I want to share this real briefly is to help you understand and be able to know what's coming down the pike, why and how it will increase your desire and ability to benefit and your clients to benefit from rehab loans. And I noticed someone typed in the chat that they love using rehab loans, especially with ADUs, which is so awesome because it is a powerful way to use them. So what is a 203K loan? Real briefly, 203K loan or the Fannie Mae Homestyle. There are multiple types of this loan, but we're going to stick on 203K. It's a loan that allows an individual to finance both the purchase of the property, acquisition cost, and include renovation into one loan. And that the funding for the renovations are completed after closing. The home does not have to meet appraisal requirements prior to closing, but all elements that would fail to meet FHA minimum property standards must be included in the escrow at a minimum. And there are two types of the renovation loan that 203K FHA offers. There is the standard and the limited, okay? Limited 203K, about 5 years ago, the name was changed to limited 203K. It used to be called the streamline, but the situation existed that there is a FHA streamline processing, so it got confused. So they changed it from streamline to the limited K. Now, here's the situation with, whoops, I hit that slide already. All right, great. So what is the reason for the change? I don't know how many of you, and you can raise your hand and mention that if you have an issue, but there is a huge need to increase the availability of affordable housing. There is so we are in a perfect storm for working with 203K rehab loans. The availability of move-in ready homes is very low. And as you both were talking about, the interest rates, not only do they fluctuate, but they're fluctuating to be higher. So high interest rates, low inventory means as is ready to move in homes are extremely expensive and outpriced for the typical low to moderate income home buyer. So those buyers are needing to turn and look at homes that are in less than move-in ready condition. Those homes will not typically pass FHA appraisal and would be ineligible for FHA insured mortgages. With the 203K loan, that situation is that it disappears. The home will meet minimum property standards. It will meet appraisability after rehab is completed, after the borrower owns the home. So HUD has a need to increase the ability to expand home ownership. It was a conversation it's a conversation in the current political cycle right now, but it's always been a major goal of Americans to have that dream of home ownership. So how do we assist that? So 203K is one of the ways HUD has created this opportunity for more people to extend their opportunities of home ownership. Lower credit score requirements, higher debt to income ratio allowances, and the fact that nobody has to come out of pocket before closing for any of the repairs or inspections and fees needed to do this work. Now, that being said, when HUD initiated this program in 1974, they established the parameters of the loan. The limited 203K was added in 2016, okay? And it had neither one of those conditions for the standard 203K or the limited 203K have changed ever, okay? HUD fees are the same today that they were in 1974, okay? The parameters for how to do the 203K loan program with regards to the guidelines and administering the loan have not been updated since 1974. So what that meant was the fees that consultants specifically were being able to charge for services was fixed at a rate that was not a livable wage. And so the majority of capable, competent consultants left the industry. And that caused an inability for lenders such as yourself to find qualified consultants to do these loans. Hence the need for a change in the program. So they didn't just change the HUD fees, and that's actually the last thing I'm gonna talk about. They did, however, change a lot of things, and all these changes take effect for all loans that have a loan origination number assigned after November 4th. So if you've got a loan that you've already established the loan number for, the HUD loan number, the FHA case number is prior to November 4th, it still will follow these existing current guidelines, okay? It's only for case numbers assigned after November 4th. Make sense?
Makes sense.
So I've got all this in a Word file, and I broke it down into several slides to make it easier to digest, but I'm going to give Audrey you access. I'm going to give you that entire Word file so you actually can share it with everyone.
Great.
A couple of important considerations to note. Consultants are required to recertify every 2 years. Okay. And that is something that HUD is now basically monitoring, and they will cut somebody off at the knees if they are not recertified. It's one of the things our association does is helps home inspectors and qualified contractors and professionals get on the roster. We provide software, we provide education and training to make them successful right out the gate. So if anyone knows a consultant who or a home inspector who they'd like to become a consultant, please send them my way. I would love to provide that support. So recertification is biannual, and HUD has now added a disclaimer in the guidelines. It says HUD is neither validating or signing off on the competency or the skills of a consultant. Okay, we're just basically establishing the parameters for them to determine their prerequisites to be considered eligible to do this work.
What does it take? What do they have to do to be certified?
In order to be a FHA consultant, an individual must have a minimum of 3 years, contiguous 3 years in the residential building trades.
Oh.
Ideally, a home inspector for 3 years, a general contractor, electrician, a plumber. Firefighters are eligible to be qualified because they have that experience in the residential building trades, tearing houses up, so breaking into them. But 3 years of experience in the residential building trades is the minimum, and anyone with that is already eligible to be a consultant. But that is,
I can testify to the firefighters knowing something about construction, because my son started in the firefighter route. They got into construction. He's like, no, you've got to watch out for like trusts that are you can't trust to stand on them. He's going through all this stuff. It's like, yeah, I learned this as a firefighter.
They know more about the safety of home construction than many contractors, because they have to know where they can stand, where they can walk, what can they knock out, where this plumbing line would run. Oh yeah, we love firefighters.
I would have never thought about that. Interesting. All right.
So that's the prerequisites is the one thing, and HUD does not currently provide any training or education for rehab consultants. And that's the hole that we fill of providing that education and training and software, which you need a specific software to create the reports. So the prerequisites are very simple. How you do 203K, the process of being a consultant, I'm going to save that for another day that I'd love to come back and open up, because since HUD has indicated, and I'm going to read it word for word on here for you, it's not on the slide. Inclusion of a consultant on the roster means only that the consultant has met the qualifications. It does not create or imply a warranty or endorsement by FHA of the consultant, nor does it represent a warranty of any work performed by the consultant. In other words, we're letting them get on the roster, but good luck and have a nice day.
Oh my gosh. Good. Yeah. HUD's version of CYA, right?
Correct. And that's why we suggest that if you're looking for a consultant, look for someone who displays the NAFAC membership. It's a voluntary membership, and it means they've been vetted, they've been tested and screened with a knowledge assessment test, and we have qualified them to serve you. So that's my little commercial. Now, the changes that affect our members here that are really cool changes. One, they have increased the amount of money that a person can use the limited 203K from $35,000 to now a maximum of $75,000, which is pretty cool. In California, you can't even, you can hardly do anything for $35,000.
No,
you can't do a bathroom.
Right. So I know in California, you've been very.
You can't do it with permits.
Exactly. The cost of the permits. Exactly. So now the increase, and remember, the limited 203K is meant for just that. Small repairs, non-structurally compromising, nothing that will take an extended period of time to complete. So if you need to replace the heater, do some roof repairs, as you said, put in a new bathroom, those are things that will be excellent with the limited K. And now they've allowed you to go up to 75,000. So as I said, like you said, Kevin, permits can be 35,000 on a project.
Yeah, well, when you go pull a permit, they, if they look at the work, it's like, oh yeah, I can get all this done for this much money. And they're like, no, you have to, we estimate that's going to cost you $50,000 worth of work. And it's kind of crazy how they do it. So.
Exactly.
One of the other things that I heard read was that they're going to review that number annually, right?
Correct.
It's not going to be stagnant at $75,000 for the next 20,000 years. It will be, they'll keep looking at it and seeing if it's the right number.
Exactly. And matter of fact, they're going to be revisiting all of these guidelines annually from this point forward, because what they've done by holding off for 45 years, They have caused a great deal of damage to the program. HUD has allowed a great deal of damage to the program because it's gotten a bad reputation, because there's no consultants on the roster, and because these program guidelines are so rigid, and it did not stay current with the world of real estate. So you're absolutely right. Good point. Way to go. So there's a big push right now. You could do the limited for more money. Now, another cool part, and this applies to the standard 203K, not the limited, all right? But this allows a mortgagee to establish a mortgage payment reserve where a borrower can finance into the loan the mortgage payment while they must live someplace else during construction. So currently it's 6 months. In other words, if I'm going to be renovating a whole house and it's going to take me 6 months to complete the renovation and the home is not inhabitable, the borrower can escrow up to 6 months of mortgage payments. That's what the current guideline is. It's going to change to where you can actually escrow up to 12 months. Now, I don't know any borrower who wants to add 12 months of mortgage payment to their loan. All right. And I don't know any loan officer who's going to really suggest that, but it allows that flexibility if you do, because remember, it's adding it to the mortgage. It's going to increase the amount of the mortgage. It's going to increase the amount of interest, etc. There's a whole lot of reasons why this is not going to be used often, but at least now HUD is thinking outside the box. Hey, we're going to let you do up to 12 months if you choose. And that's really cool. So what is the current condition with regard to occupying the property? We just established if you cannot occupy the property with a standard 203K, you are allowed to finance the mortgage payment while you have to pay to live somewhere else. Currently, the limited 203K said, hey, these are such limited repairs, you should be able to move in right away. And so we're not going to allow any amount of time for you to live outside the property before you move in. That now will be up to 30 days. So the borrower can be able to not have to live in the home up to 30 days, but they cannot escrow that 30 days of mortgage into the loan. So if they can't move in right away because of construction, it does not disqualify them from getting the limited. This was something that made it ineligible. So right now it's 0. It's going to go up to 30.
Great.
Also, with the limited 203K, excuse me, the number of months for completion of the limited K is currently 6 months. It's now going to be jumped up to 9 months. And the rationale for the increase in time frame for completing repairs is from the perspective that, just what you said, Kevin, getting permits takes a long time. In many cases, you're sitting out there 2 months because these municipalities, they're understaffed. They lost a lot of their employees following COVID, and they never brought them back. And they're just and you have to wait months and months to get a permit. So if you've got 6 months and you spend 2 months waiting for permit, you just cut the contractor's time frame to complete the repair down to just 4. Okay.
Okay, but also with the permits is a lot of this stuff on the streamline may not even need permits. Am I correct? Like
limited, yes. With limited K, there is but many municipalities will require for any, you need a permit in most municipalities around the country to do a bathroom.
Yes, a bathroom is different because if you remove a tile on your bathroom, that needs a permit. But like if you're replacing flooring, that doesn't require a permit typically.
In some municipalities. So remember, this is a national program.
Yeah, I know, national. So there's some places you have to pull a permit to paint, you know.
That's right. Exactly. There are in Pennsylvania, if your home was built before 1978, it has the high risk of having lead paint disturbed. You have to get a painting permit. That's exactly correct. So good call. Way to go.
Wow.
So it's now going from 6 months to 9 months, which is a nice touch. Okay. Here's the cool part. A lot of lenders were very unhappy, or not unhappy. A lot of loan companies were very, very concerned about the fact that the limited 203K is allowed to be stretched out for 9 months, and that the cost of the repairs have gone from $35,000 to $75,000. You can do a lot of damage with $75,000 without some form of oversight. And currently, 203K consulting fees are not reimbursed to a borrower with the limited K. Okay, you're doing only $35,000. HUD said you don't necessarily need a consultant. We don't think so. We're not going to reimburse you for those fees. You can't add them to the escrow. That will be changing. So now that the loan amounts have gone up to $75,000, the consultant can be brought into the process, and the fees for that consultant are able to be escrowed into the mortgage. They're now considered allowable fees. So this should give loan officers a lot of comfort, because here's the thing. With a limited 203K, without a consultant's involvement, a lot of the work is falling back onto the LOA. You're required to look at the contractor's bid. You're required for the limited K to call the township to find out if permits are required. You're having to be concerned with and qualify whether or not the repairs from this contractor's bid will or will not meet FHA minimum property standards without having gone into the property or knowing what those standards are. And so that's why many times, and raise your hand or type in the chat if this has happened to you, you've done a limited 203K, got the contractor's bid, did all this due diligence. It really shouldn't come under your purview as a loan officer, only to find that it gets kicked back by the appraiser because the appraiser found items that failed to meet minimum property standards that were not included in the contractor's bid. And not only did it not meet the minimum property standards for the limited 203K, once they added those additional repairs, it exceeded the 35,000, kicked it out of a limited, and then they had to call in a consultant at the last minute to try to close a loan with a standard as quick as possible that was about to close as a limited. Anybody have that happen? Okay.
I didn't have that happen because I am so hands-on all the way through. I've done 203Ks and Homestyle renovation, and I did so much work between me and the head consultant, or in the case of the 203, the Homestyle renovation, what do you call the company that handles the oversight for that? It's a little different.
Well, there is a company, there are companies, there's Granite, there's other
Granite.
companies that it's a draw management service.
That's it.
They're under some scrutiny right now because of the way that they provide their services.
Oh, interesting. I feel like I was best friends with them for a while there. I didn't know they were under, well, and this was, yeah, okay.
Well, that's another topic for another day. But the point is this, now that a consultant can be brought in early on, the fee to hire, and we're going to talk about the service that consultants offer real quickly. And I'd love to come back and really peel away the layers of that onion for you. But the point is this, you as a loan officer, you should not have to have the competency of what construction documents need to be to finalize a loan. You should not have to be concerned or have to have that hands-on ability to understand what a minimum property standards requirements are for a home. And did you go and inspect that home personally? Did you walk around the property? Not always. So why should an LOA be required to do that when they have so much on their plate already, just getting a loan to closing? And this is what has turned off a lot of loan officers from even considering using rehab loans. So now I saw a question from someone in the audience that said, which lenders do 203K loans? Any lender that can originate a FHA mortgage, any lender who can originate an FHA mortgage, a 203B, can originate a 203K limited. You do not have to have DE endorsement to do a limited. However, if you are a broker, there are a number of excellent wholesalers who would love to give you the opportunity to add standard 203K loans to your portfolio.
Yeah, just talk to your where you go for FHA loans, and you'll find a 203K lender.
Correct, exactly. So yeah, so like I said, if you're already dealing with someone who's originating an FHA B, you can already do K. Limited. And now that the consultant fees can be included with that limited, it takes even more of the burden off of you. So I hope that answers your question. And just to get back to a previous question, someone named Jill James is a qualified building code inspector. If you've got 3 or more years experience, Jill, you are eligible to be a consultant. Audrey will share my contact information and it should be appearing on the slides. I don't know why it's not, but I will type it into the chat, my email address. There you go. I just typed it in the chat, and the information for the webinar is.
They can't see it, Catherine. So
okay, I'll just send it to you.
They can let me know.
Okay. Put it in the chat, and I think I can send it to them.
Okay. All right, keep going.
I just sent it. So that's the good news with limit. Now for the standard 203K, they increased it from 12 months. The amount of time you can do the repairs is currently 12 months. It will be increased to 24 months. I have a problem with that. I have a big problem because if you tell a contractor, how many of you ever worked with a contractor? Okay, raise your hands, type in chat.
Yeah.
If you say to the contractor, I need this done in 3 months, when do they get it done? 4 months.
Day 89.
Correct. So if a contractor is made aware of the fact that right now, the maximum amount of time for completing a rehab loan is 6 months. Okay, you have to, it's going from, I'm sorry, that says 12 to 24. It's supposed to be 6 to 12. The amount of time that you actually can, the estimated time for completion, yeah, that's supposed to be 6 to 12. It was 6 months, now they're making it 12 months. I don't know where 24 came from. All right, so
Catherine, I have a client who was building a new, wanted a big garage workshop area. He wanted to do a rehab loan. I said, absolutely not. I know you. There is no way on earth you're getting that thing done in any sort of guideline period. And so we went about getting the money a different way. But I mean, sometimes it's the borrowers too. If you know that they're slow, I mean, maybe a little extra time is helpful.
A little extra time is helpful, but you have to remember, in most cases, most lenders do not like or will permit a borrower to do repairs themselves. Okay. A self-help 203K loan has a whole lot of, it's a big, it's a Pandora's box that as a consultant, we don't like to open up. And most loan officers and mortgage lenders do not like to do it. It's very difficult to qualify the competency of the person to do the repairs. But let's say the person is a general contractor. They have a licensed contractor. They've been working for 25 years. They want to do the 203K work themselves. Okay. Here's the thing. The goal of doing the 203K yourself, a self-help 203K, the goal of doing it yourself is so that you can save money on your mortgage, right?
Right.
Well, here's the thing. HUD requires that the lender escrow the cost of labor and material for a third party, for an arm's length contractor to do the work. So in other words, I'm a general contractor, I am, and I want to do a 203K on my own home. The cost of the materials that are going to be needed for me to do my home are $50,000.
Okay.
The cost of labor, if I were to hire a contractor, is another $50,000.
Yep.
The lender and FHA says you've got to escrow $100,000 into the mortgage.
Oh.
Because if for some reason you break a leg or whatever and can't do the repairs, they need to make sure that someone's able to be brought in to complete renovations on their home. Because as I teach my borrowers all the time, when you get a mortgage, you don't own the home, you own a piece of paper called the mortgage. The bank owns the house. And they want to make sure the home is renovated. So what happens is with a self-help 203K, they escrow the full amount of labor and material, but when you are applying for, and you get no upfront money. So not only do I have to be a qualified contractor, I got to have the cash. If I have the cash to do the repairs, why do I need the rehab loan anyway?
Right.
So when you get draw inspections, as the contractor, I have to submit receipts to the consultant or to the loan officer or to the disbursement agent. I got to submit receipts for my materials. And I only get reimbursed for those material costs. And then after I complete the project, that $50,000 of excess escrow, the way you get out of that higher mortgage is you have to refinance, and then you get the savings of the $50,000 off of that new mortgage.
I've done it where the buyer or the borrower, sorry, has done part of the work, not all of it, but part of it. And so it can work depending on the person, but Jenny has a comment in here. She says contractor time versus real time is a big difference, which 100% I've diagnosed the industry as a whole just based on my experience, but I won't share it here since I'm not a medical doctor. Anyway, it is definitely challenging working with people who definitely operate on a different vibe. So you do want to make sure that you're overestimating times, overestimating money, all of that, right?
Well, you don't want to overestimate money, and that's what a consultant makes sure that the estimates the contractor is providing are accurate, because overestimating the repairs puts more money into the mortgage. And as I think Joni mentioned, she talked about a principal reduction and the recast. Well, you can do that, but after you have paid on this mortgage with this higher interest rate and sometimes they can't qualify for that labor and material. They thought, oh, I'm only going to add 50,000 to my purchase. You're adding 100K. So it blows people out of the water. that they don't expect. So
So as with everything in mortgage lending, it just depends. So we run every situation individually to see what works or
every
doesn't
case
work.
is different. And that's why I love this work, because it's not like a home inspection where the home inspection is boilerplate. Okay, over here, we've got this crack in the wall. Over here, we've got, I love the uniqueness. I love the creativity I get to bring and a consultant gets to bring to help a person create their dream home within financial budgeting, which is my job to help keep people, with champagne tastes and beer budgets. Okay, my job is to help them be real. But because my job as a consultant, the job of a consultant is we are there to give the borrower and the loan officer and real estate agent an estimate of what the repairs are, even at the stage of negotiating with the seller in many cases. And then we have to create those architectural exhibits and then coordinate with the contractor to get them to create their bids, their numbers for their work. And then we compare the two to see, okay, he's putting in an entirely new electrical service system for $1,000. I don't think so. What's going on here? Oh, well, that, the electrician's my brother and he's going to give me friends and family discount. We don't have friends and family discount. So a job of a consultant is to evaluate the scope of work, to confirm permits, identify architectural exhibits that are needed, plans, footprints, setbacks, to ensure that the work is going to be completed. And then after closing, monitor those repairs, estimate and then authorize or approve disbursement of funds to the contractor, and deal with the trouble that comes when the marriage between contractor and borrower hits the bumps. Just like Jenny said, contractor time versus real time is one of the biggest frictions that causes the divorce between a borrower and a contractor. And the consultant is that mediator. We are the divorce attorney. We're the counselor. We're the one that helps them find their new love, their new contractor. And we're the ones that get that life, that home continued. So right now,
just getting contractors to show up sometimes is
thank you. That's one of our jobs.
Yeah, the ones that said, "Oh yeah, I'll definitely be there at 6:30 tomorrow morning." You go out of your way, you wait, and then they never show.
Exactly. So all this work is what a consultant does. And a lot of people don't realize. They think, oh, all the consultant has to do is go out, inspect the house, and give me a report. No, that's what a home inspector does. Our jobs are so much more complicated and so much more in depth. And up until now, we were getting fees for services as low as $400. You can't get a home inspection for $400 in this market right now. And that's what consultants were struggling with. Why should I do work that we were capped at $1,000 for our consultation services? I just did a project where the renovation is going to be $380,000.
Okay.
My fee for doing a $380,000 renovation where I'm dealing with architectural plans, multiple contractors, and doing a complete write-up that was a 35-page write-up, I only got $1,000. Okay.
What are you
How did
thinking?
that take you? I mean, how many hours is that?
Yeah.
It's gotta
That
be
was
weeks.
a lot. I think it was,
I don't think that's minimum wage, not even
it's
in
not even,
Florida.
I actually, between conversations with the architect, because I was not happy, but his setbacks didn't work, and the building code inspector, because I wanted to check in with him before we closed this loan. I think I've banked 8 to 12 hours already. And that doesn't even include my site visit at the property, which was 3 hours. Yeah. So, right. We weren't even making minimum wage. So.
Well, and that's before the loan closes and doesn't include inspections, et cetera, right? Okay.
That's before the loan closes. All this work is before loan closes.
Yeah.
This is to get you to closing.
Yeah.
Okay.
Anytime I've done several, home projects and working with lots of contractors, and getting them to show up when they say they're going to show up is like the biggest hurdle. And then planning the contingencies in case they don't show up, you got to keep the project still moving ahead.
Managing the contingency reserve funds, inspecting the work after closing, those fees are $350. Currently, they're going up to $375, including mileage. But the pre-closing fees is what stopped many people from entering this industry. Because why would I put 10 hours or more into a job for $1,000? That's not happening. So the fees now for consulting have changed to, these are the current fees. These are the new fees that take effect November 4th. Projects up to $1,000 for repairs less than or equal to it's $1,000 for repairs that are less than or equal to $50,000. It's $1,200 for repairs between $50,000 and $85,000. It's $1,400 for repairs between $85,000 and $140,000, and it's 1% of the repair cost or $2,000, whichever is lower, for repairs over $140,000. So now even $2,000 on a $380,000 job is not giving me a good number, but it's better, but it would be better than the $1,000 that I just pocketed. Okay. So a lot of people are saying, well, the consultant doesn't need that much money. Why do they have to get such a big jump in their fees? We haven't had a raise at all since this program initiated in 1974.
Wow.
Every 45 years, Catherine, that's when you get a raise.
Every 45 years. Thank you.
Wow.
I hope to God I'm around, and I would like to be around to see that. But they are reevaluating.
78, you could buy a loaf of bread for 10 cents. Gas was 39 cents.
Well, see, back when this initiated and the fees capped out at 1,000 for rehabs over 100,000, in 1974, the thought of doing a renovation of 100,000 was not even in the realm of possibility. You didn't even buy a home for 100,000.
No, yeah, they were costing like $30,000. That's in San Francisco.
So the fee schedule started at, between repairs up to $5,000, from $5,000 to $15,000. No, it's just, we needed these changes. Now, so lenders who say, oh, well, this is going to put a burden on the borrower. What is the burden that your borrowers are currently experiencing, not having access to competent consultants to do this work? What is the burden of your industry not being able to have capable people do this work?
Well, I don't even know that people are totally clear on exactly what the purpose of the HUD inspector is, other than this other piece in the process that they have to deal with. Because, I've always done so much myself, so it's good to know that there is a certification that they have to go through, that they do need to be qualified, that there are some requirements. We also have a comment in the chat. To be clear, this is a first mortgage. This is not a second at all, ever, period. And congratulations to Garrett, who's in Georgia, they've done 131 new consulting projects just this year. That's crazy.
Garrett Feist is one of our NAFAC members in Georgia. Great. He and I think, I won't say definitely, but I'm pretty certain he and I have the most longest standing experience as consultant. I think I've been doing it for 32. I think he's got 37 years. We've actually started the industry. We were actually there in the beginning. For example, my HUD ID number is 437. Okay. And right now they're into the thousands. So that just gives you a relative positioning of where I am. So now Catherine had a question. Can a 203K loan for remodel of a 240K be a second lien position? No, they must refinance the existing mortgage, and then they actually will pay off the first mortgage. The refinance mortgage plus the renovation is escrowed into one loan. It must be a single loan. But a lot of people like, oh, well, they've got a great interest rate now. I don't want to lose that. Think about the alternative of them taking out a second mortgage for rehab. What are the rates for second mortgages? Okay. And let's also think about, what if they were to use store credit? What is the interest rate at Home Depot and Lowe's right now?
30.
Well, and again, this is just like everything else we're doing right now. Should I do a first and a second? Should I leave the first and do a second, or should I do a whole new first? It's very individual. It depends on the situation and what the borrower needs. So there's no across the board blanket answer to anything ever.
But don't discount.
Even though they want it there to be, because then it would simplify everything. But that's just not how it works. So we just do this one at a time, one by one. Does that work for this borrower? And move it along, right?
Absolutely. Absolutely. Yeah. So that's the fee schedule. So why does this matter? All right. So this changes how you and your real estate sales partners can approach a dwindling inventory of homes. Okay. This is how you actually can be able to say to a borrower, okay, well, your maximum qualifying is X. But if you look at a home that's in this community or with this price, we actually can add repairs to make that home meet some of the requirements and be more livable for you. And here's the really cool part. Gen X and Gen Zs, They are very happy with smaller homes. They are very happy with multifamily homes. And a 203K loan is an amazing tool to allow a person to buy up to a 4-family dwelling and renovate all 4 units, live in one, and have those other 2, 3, or 4 unit, 1, 2, or 3 additional units as investment properties.
Can
And
you
so
also
this,
still do the where you buy a 5-unit and convert it
Yeah.
into a 4?
you
That
can
was
drop, and
yeah.
that was that's when we first met. I told you how to do that. They can
Uh-huh.
take a 5 and kick it down to a 4. And
That was my first 203K loan I ever did. Was my borrower came, they had been dinked around by some other lender for weeks and weeks, and we're in contract. The seller, this place was worth 200 grand, and this was 20 something years ago, more than they were in contract for. The seller had another buyer, wanted to get out of this contract. And so she came to me and she was freaking out. 5 units to 4 units, and we got it done in 2 weeks. Don't even ask me how. But I, to
Wow.
this day, with that person who is also a realtor, I'm referred to as the loan goddess, because they still own that property and it is worth, I don't know,
Millions.
a lot.
I mean, 8 times more than they paid for it. So anyway, yeah, that 5 to 4 unit thing is
Well,
awesome.
that's a huge thing, because a 5-unit building, typically, because only commercial loans are available on it, they don't sell for as much. And a 4-unit would, even though it's the same square footage, would sell for more because of the loans that are available for that.
Yeah.
So yeah, there's you just add value by converting 2 units into 1.
Yep.
But you have to be very careful, because some communities won't allow that. San Francisco won't allow that, or it's very, very difficult to pull that
Well,
off.
as always, you just have to check whatever you're about, whatever you think you can do.
Yeah. Well, this is the communities don't want to lose housing, so that's how they look at it.
Well, I just wanted to say, I wanted to basically share that information, and I'm just about done.
Okay.
Okay. And I just wanted to basically share the conclusion. And hang on for a second. My screen dropped off. So let me share that. Okay, great. So share the screen here. Bingo. All right. So in summary, working with a qualified 203K consultant is essential. Even if you're not sure if you need a consultant, connect with one so that you actually have the benefit of that person's experience and guidance. Call me, email me, message me, and say, hey, I'm looking for a consultant. Or even if you just have a question, would this work with a rehab loan? Is this something that would do well for me? That is what rehab consultants can provide for you. So I just hope that everybody will pay attention to the opportunity, take a chance, try a rehab loan, contact a consultant, and create a partnership.
Yeah.
Many of our NAFAC members are provided with PowerPoint presentations to be able to, and for those of you who are in California, I know you get your CEs through your association for free, but we have PowerPoint presentations that you can partner with the consultant and then help educate the real estate sales agents why they should be open and excited about rehab consultants. So what's your next step? Partner with the consultant. Particularly, you want to partner if you want to encourage your real estate sales agents to partner with a home inspector who is also a 203K consultant, because we have the ability to say, hey, if this is an FHA loan, you may want to flip it to a K, and we can guide you through that process to be able to save deals. Rehab consultants are have as much motivation as you to get that borrower and that loan on the other side of settlement. So I hope that this was helpful. I hope does anybody have any questions of me?
Well, there's a few things. So first of all, just wanted to say that you mentioned the inventory levels, and Redfin came out and was indicating that home prices are still going up. They're up 0.5 in September, 6% year over year, but we have 20% fewer homes on the market today than 5 years ago. 20%. So,
Wow.
and just for the record, in case you're watching things like, population, we have a lot more people than we did 5 years ago. So we are definitely in a place where this kind of thing is a great tool in our tool chest to have. And I love the idea of doing presentations for realtors, or even teaming up with a realtor and doing first-time home buyer presentations. But in those contexts, I mean, and again, I've done a number of these over the years, and the most important thing is really understanding your borrower and what their ability to manage something like this is. And I don't mean manage the project, I mean manage having this going on in their life at all. So a good consultant that is going to manage the construction part and the money part is huge, huge, huge. So we'll make sure that we get everyone connected with you who wants to be Catherine. And also, let's talk for a moment about what you're seeing, because we're seeing a lot about ADUs, and especially in California, where, I mean, geez, we don't even have side setbacks or any sort of constraints anymore at all, it seems. So what are you seeing across the country with regard to ADUs, and how is that something that can be done with a 203K?
Absolutely.
With,
Yes.
or with Homestyle? Because I don't know, I haven't done them.
It's whatever yes. So which lender does what loan is, there are actually 4 types of renovation loans. And as Garrett commented, 25% of his are 203K, the other 75 are non-FHA. There's the Fannie Mae Homestyle, which is a renovation loan that does not require the property to meet HUD minimum property standards per se. But if there's a giant hole in the roof, no underwriter is going to write that. Okay. But so don't go crazy thinking, oh, we can do anything and not meet minimum standards. No. But for the most part, the nitpicky things about FHA minimum property standards are not required in a Fannie Mae Homestyle. There's also the VA rehab loan. And there's a huge misnomer. There's a huge misinformation about a VA rehab loan. Many people think that you can only go up to $50,000. That is not true. You can get a VA rehab loan for whatever limit the wholesaler or the loan company is going to fund. There are a lot of them will only go up to 50,000, but there are a great number who do 100,000 and above. So the question is not, oh, well, VA only allowed you to do 50,000 in repair. That is not true.
Wow.
So there's a VA rehab loan, there's the Fannie Mae Homestyle, there's the FHA 203K, and there's the Freddie Mac Choice renovation loan. So there's multiple options that are available for borrower. And as Audrey, as you clearly pointed out, know your borrower's needs, know what they are, and then know how to best serve them. And here's another thing I want to just throw out there for all of you loan officers and LOAs and mortgage professionals out there. Just like everybody, you are looking for ways to sell to a customer you sold to before. Rehab loans are an amazing tool to go back and talk to the person who you helped get a mortgage 5, 6, 10 years ago, who might be planning on selling their home in the not too distant future, but they've let the home go with some deferred maintenance, outdated systems, older appliances, older components. You could offer them a renovation refinance. And with the FHA 203K, that's an assumable loan.
Oh, wow.
Yeah. Right. Well, it's
Well, that's not so great right now, but
we can talk about assumable for a minute, just because I have a realtor who has a borrower who put an offer on an assumable loan, and they were very excited, 2 5/8, and this was the answer to all of their dreams, and the whole thing fell apart. They got into contract, and the lender took too long, the seller wouldn't wait, and the whole thing was a mess. So they're
wait, the seller, it was a seller's lender that was taking too long.
Yep, doesn't matter, does not matter. The whole point is the seller wanted their money, and they weren't going to wait forever. And think about it. If you are the lender who someone's trying to assume that loan, how incentivized are you to keep that 2 5/8 on your books, or do you want that?
I'm just letting you know it's an option. It's out there.
It's a great.
Also,
I think it's a great option. I think that everyone needs to go in with their eyes wide open.
Yeah, but the idea is knock on those doors of those customers from 5, 10 years ago. Hey, do you need a new roof? Have you had some earthquake damage? And I didn't mean to interrupt you, Kevin, but there's one more thing I want to mention, that because Audrey, you asked what is hot in the world of renovation right now. Rehab loans can be used on manufactured homes.
Interesting.
And there is a huge increase in the use of manufactured homes due to the absence of inventory. So So Kevin, forgive me for interrupting you.
Okay, so let's go back to, because we really didn't cover how do you just, with an ADU, will they let you do ground up ADU? Will they let you do separate from the house, or does it have to be in the footprint? Like, what are the rules around
It
that?
needs to be in the footprint. It does not have to be attached to the dwelling, the main dwelling unit,
Okay,
but it has to already be constructed. You are renovating. You cannot
Okay.
build an ADU.
got it. Thank you for that
You
distinction. That's
can you
important.
convert a garage into an ADU?
Yes,
Basement,
There you go.
attic,
yes. You
got it.
think about just like you're taking a 5 to a 4, you're taking a 1 to a 2.
Yep, got it. All right.
But it must
That's
already
enough.
be an existing portion on the footprint. So if you have a carriage house garage and you want to convert that into an ADU, totally awesome.
Okay, so it doesn't have to be attached, it just needs to be already
In
there.
the on the property, and it must already exist.
All
And
right.
a really good point with the FHA 203K, it is a rehabilitation mortgage.
Yep.
It is not new construction. So you can, if let's say there is a carriage house garage and it's being held up by toothpicks, I can raise it down to the foundation, but I must retain all portions of the existing foundation. You cannot demolish, you cannot cut into, you cannot damage the foundation. You can, and I've had people take a prefab, we knocked down the original house down to the foundation. In this case, it was a basement, and we literally popped the prefab right on top of that basement. You can build a new construction on an existing foundation.
Interesting. We have a comment here from Lynn, who's a rep for Plaza. She says you can build an ADU on Homestyle and Choice.
Exactly,
Oh.
not 203K, exactly. And
Right.
a shout out to Plaza, to Jim Bopp, a very good friend of mine, VP of Renovation Financing at Plaza. So yeah, but again, like I said, when you are in FHA mortgages, you have a lot of restrictions. Homestyle and Choice are renovation financing with the guardrails off.
Got it. Well, it's a lot for everyone to unpack, and I think there are a lot of LOs who have either been afraid of this, or there are some companies who require that all the renovation loans go through one person or one department or whatever. I'm like, yeah, these are not that hard if you have a brain and you're not afraid to work, because I love it. And I know so much more about construction now than I did 20 years ago, because you just learn as you go. And so I think that knowing that you have a good person by your side, Catherine, would make all the difference in the world. So with that, we are at the top of the hour. We were very grateful.
Oh, that
Thank
went
you so much
fast.
for being here. And it did go fast, Catherine. That's always the sign of it's a good one, because poof, the hour's gone. So with all that, guys, just hang on. It is, I always think it's going to get better. The rates are better than they were before. Certainly better than a year
Yeah,
ago.
we got some good things coming up down the line. We got some new conforming rates coming out, especially for the high balance. They're gonna be close to what the couple of lenders have announced, but I think that might be a slightly higher.
Yeah, I mean, I swear to
Happens.
God, ever since they bumped those high balance rate, loan limits up a couple of years ago, everything I've done, I don't even know if I've done high balance. Everything went into jumbo after
Yeah.
the pricing was so much better. So we'll see. Anyway, with all that being said, just keep your
Hey,
eyes.
listen, I just have one last thing to ask, if I can make an ask.
Okay.
Yeah.
We are growing we're growing our membership in California. So if any of you, all of you know a home inspector or a general contractor who you'd like to do a favor for and give them an opportunity to add this business revenue stream, please, will you send them my way?
Great.
Okay.
We have a special 2-for-1 membership promotion going on. So send them my way.
All right. Well,
Cool.
that sounds great. All right. Well, thanks everyone. Have a wonderful week, and we will see you next Tuesday, 11 a.m. Pacific, 2 p.m. Eastern, or somewhere in between. Bye, guys.